Yeah, but don't forget we had an 8-month consolidation with a 40% range.
Yeah, that's why I asked.
Right. So generally speaking, it tends to be explosive coming out, the banana zone, right? And I kind of set people up for the banana zone, and here we are in the banana zone.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal dives into explosive insights about Elon Musk, Trump, and Vivek Ramaswamy's bold visions for DOGE. As one of the most trusted crypto investors, his predictions for meme coins like DOGE in 2025 are mind-blowing. Let's catch him up to know more about this thrilling future.
So the question
So we're
is,
in the banana zone. So we're in. You're saying we're firm in the banana zone.
How can it not be bananas?
Okay.
Right, 50% in a month.
Yeah. How big are the bananas in the Cayman? Because that's quite a big banana.
Okay, they're not very big here, but we're not far from a lot of big banana plantations in different islands. But so that's a decent-sized banana, but that's the start, right? Because generally speaking, the post-election year, or what we would call crypto fall or crypto autumn, tends to be very strong. So it tends to be very strong. The macro backdrop is obviously very good because of deregulation, new government, all of that stuff. So we've got a good setup. It's gone far and fast. I think everyone's a bit PTSD'd still, so which is why I err towards the it probably has one more squeeze because so many people think it needs the correction now. But, I hear your point of view too. So I'm not, saying it has to be one or the other, but that's my view. It goes up first. Everyone thinks, oh, it's fine. We're at 110. We're getting 150 now. And then it corrects in everybody's faces quite sharply.
So you're saying max pain? You're saying max pain is another leg up. That's what you're basically saying. Max pain is sending this thing one leg higher.
Yeah, one leg higher in kind of disbelief, and then kind of trapping a bunch of new entrants in, and then it does the typical 30% correction in a week and a half, and everyone's like, holy shit, what is this thing I've bought? Why did my friend of Thanksgiving tell my, cousin of Thanksgiving tell me to buy this? It's gone down 30%. We've got to go through that sort of stuff. Then normally it should rally all the way through till US tax season.
Which is April. So that's April.
Yeah, it's the March-April period. It usually is extremely strong going into that. And then if it's very strong, then you have a very big correction because everyone needs to pay some taxes. So, and then normally what happens is it corrects again. So you can see it there in 2021. It then had a 50% correction that time. And I'll come on to that in a sec. And then it rallies into year end. I think we're closer to a 2017 analogy, which was a much stronger back end of the year. I think people have real PTSD from last time. And I was actually going through this morning, what was the key factor that caused the stunted cycle last time? It's because the speed the business cycle went up straight out of recession and how fast financial conditions peaked. They peaked in March of 2021, and the market essentially peaked there with the second attempt at rally. 2017 peaked way towards the end of the year. So it was just the weird setup of the post-COVID, inject all the liquidity, then, oh my God, we need to withdraw it. That setup, I think, caused that cycle, while 2017 and 2013 were more similar.
Okay, and
so that means a correction over the summer and then a big rally into year-end.
Bitcoin CME futures have reached the $100,000 mark for the second time in just 1 week, sparking renewed speculation about whether Bitcoin's spot price will follow suit. On November 29, futures on the Chicago Mercantile Exchange, CME, surged to $100,200, repeating their November 22 breakthrough. However, Bitcoin's spot price, despite its own bullish momentum, has yet to break the six-figure milestone, stalling at a high of $98,600 before retreating due to selling pressure. This divergence between futures and spot prices reflects contrasting dynamics in the market. According to data from the Kobayashi letter, Bitcoin futures open interest on CME has surpassed 40,000 contracts, with pre-Thanksgiving volumes reaching an impressive $12.3 billion. The surge in trading activity, particularly during the European and New York sessions, underscores strong institutional interest. Coinbase also revealed a notable Coinbase premium, where the BTC/UST spot price outpaced Binance's price by over $200, hinting at robust spot buying activity. Still, reaching $100,000 remains a formidable challenge for Bitcoin's spot price. Popular trader horse characterized the $100,000 level as a fortress, where traders often take profits early, halting upward momentum. Order book data confirms significant resistance, with a thick red wall of sell orders from $99,700 upward. Leverage usage on platforms like Bybit and Binance reflects traders' determination to propel Bitcoin past this psychological barrier. Futures liquidations have also intensified the market's volatility, with CoinGlass reporting $55 million in short positions forced to close. Bulls may need Bitcoin to reach $99,000 to trigger another cascade of liquidations, potentially giving spot prices the momentum to break the six-figure threshold. For now, the battle for $100,000 continues, as futures outperform spot prices in a market characterized by high stakes and intense speculation.
Go back to the longer version of that. Because everyone shows this and goes, oh my God, it's awful. That is a big kind of wedgie pattern. It doesn't look catastrophic, right? It's been kind of sideways range.
Yes.
But my guess is, same way as you, that ETH probably outperforms. And the reason being is you're just going to deregulate this thing. And if you are a financial institution, you will tend to build on ETH or ETH Layer 2s. And the reason being, it's like IBM or Microsoft. It's a broad, deep ecosystem. You don't get fired for doing it. Yeah, I don't disagree. There's that weird psychology that goes on. It's also, I think, there is going to be fundamental flows behind it as well. I think ETH overbuilt capacity or block space for where we are currently in the market because of the Layer 2s. But over time, I think we'll use that block space up because I think the institutionals will use. Again, think of Apple versus Microsoft.
Okay.
Right? There is no investment bank in the world that uses Apple.
Because?
Why? The ecosystem of developers and applications for Microsoft is much bigger. This is exactly the same.
Okay.
So we may use Apple at home, we may use all Apple phones, but the big corporations don't use Apple unless they're in the media industry. And you can hire more because there's more around and there's more applications already been built on it. It's past the kind of Lindy test. So they think, okay, this is the easiest way to do it. So let's say we're a bunch of banks and we want to have some internal settlement system between us for derivatives, whatever it is, right? We're unlikely to use Solana. We're more likely to use EVM.
Ethereum's Layer 2 ecosystem has seen a remarkable 70% rise in volumes over the past month, signaling a resurgence of activity and reigniting discussions about its potential to eclipse Solana. Layer 2 solutions, designed to address Ethereum's long-standing issue of high transaction fees, often exceeding $4, have gained traction by offering scalability for decentralized applications, dApps. Despite this growth, Ethereum faces stiff competition from Solana, which has carved out a significant share of the decentralized finance, DeFi market. Solana's performance in November highlights its growing influence. The blockchain captured 35.4% of decentralized exchange DEX volumes, a notable increase from October's 27.2%, as per DeFi data. While Ethereum and its Layer 2 ecosystems maintained a larger market share at 45.2%, this marked a decline from 50.1% the previous month. Additionally, Solana recently surpassed Ethereum in total fees generated, fueling debates about Ethereum's valuation compared to Solana's more modest market capitalization. Despite Solana's impressive strides, Ethereum's dominance remains evident in total value locked (TVL), boasting $69.7 billion compared to Solana's $9.2 billion. Moreover, Ethereum's Layer 2 solutions, like Base and Arbitrum, are rapidly expanding, contributing to a combined TVL of $11.4 billion. This dynamic growth underscores Ethereum's potential to challenge Solana's momentum, especially with plans for future fee structure optimizations. While Solana continues to lead in user experience and rapid adoption for token launches, Ethereum's robust ecosystem and institutional backing ensure its competitive edge. The rivalry between these two blockchains sets the stage for an exciting future in the DeFi space. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.